welcome to the lending session, and this evening we're going to discuss credit memorandum. Now, before we start our discussion, first of all, I would like to take you back on some basic issues that we've already covered. First of all, we discuss about some barriers, okay? We discuss barriers to what? Barriers to lending. And one of the issue that was there is that there is an issue of lack of equity. Okay, again, there was an issue of lack of education and experience. Okay, without forgetting poor fund management. Poor fund management. Good. So that's to say, these not only limited to this, okay, there can be some other factors, but these are some of the factors that can make someone or someone's proposal to be declined by the bank. All right. Again, we discuss some basic credit facility, okay, some basic credit facilities that are issued by banks. Okay, we discuss some basic credit facilities that are issued by banks. For instance, the overdraft, okay, then business loan, and also discounting facilities, okay, discounting facilities. So at any given time, you should expect that one of the customers, one of your esteemed customers, can come over to your bank asking to be given one of these facility, okay. So it will be the combination of what we discuss on the barriers for lending, as well as the type of credit facilities that should lead you to make some decision. But only these two are not enough. Why? Because we have different types, okay? We have different types of bank customers who can come to you asking for credit facility. Therefore, depending with the type of customer who approach you, all right, you have to make again the decision on whether the facility so asked is appropriate to that particular individual. And again, if that individual is qualified to be offered that facility they are asking. Finally, we discuss the issue of principles, okay? Principles or the canon of lending, as well as the mnemonics, that is assessment of credit facility, okay? Assessment of credit facilities. Under the assessment of credit facility, we discuss the company as well as the 5 C's, okay? However, we saw that whether you're going to use company, 5 C's, or any other credit assessment model that is out there, but you should never forget the following principles. Number one, safety of the fund. Number two, profitability, because lending is not a charitable work. Profitability. And number three, liquidity of the bank. All right. One moment, please. Okay, I apologize for that. Well, therefore, These are the issues we've covered so far. Now, today I'm going to add one more, if possible, two important issues: the credit memorandum and the covenant. I believe a combination of these, okay, at least can take us somewhere. We'll have a broader picture of the meaning of lending and how we should start appraising a credit proposal, right? If the request involves a substantial amount, or it is from a reputable customer, it may be necessary to submit the same application to the approving authority for information and noting. Why? Because we have approving authority, okay? We have approving authority in our offices, and the approving authority has been nominated by the bank's credit manual or the lending guideline. Now, that is to say, in any given financial institution or a bank, okay, the authority can be vested on, number one, the credit officer, okay, number two, branch level, let's say the BM at the branch level, number three can be at the zone, if you have zones, okay, can be at the zone or zone level, number four can be at the headquarters. Okay, now at the HQ, depending with the amount of funds that is involved, okay, and the significance of the project in question, all right, it can involve even the board of directors, okay, it can involve the board of directors. For example, a bank wants to guarantee or to finance a massive government project, like, for instance, in our country right now, we have the SGR, or we have that hydropower dam, okay, hydro power dam, okay, for the electricity, right? That one is massive project, all right? If a bank is to inject funds into such a project, it's going to be for a long time, and there's a lot of risk involved. That being the reason, you need to seek the appropriate authority for approving. But here the question: who is going to meet, or who is going to sit for face-to-face interview with the applicant? Okay, it is the credit officer. Okay, it is the credit officer, alternatively known as the loan officer. All right, so the loan officer is the one who has who has sat face-to-face with the applicant. That being the reason, the loan officer knows better than anyone, okay? The loan officer knows better than anyone. Therefore, it is the responsibility of the loan officer to write a credit memorandum to the approving authority. Again, it is the responsibility of the loan officer to brief the BM, okay, or zonal manager, whoever, all right, for the decision making. Therefore, an individual who is supposed to prepare the credit memorandum can be a loan officer or the BM with the aid of the loan officer, and refer the entire thing to the approving authority for decision making process. Now, what is the content of the memorandum? Basically, there is no specified content, there is no specified format of the memorandum, credit memorandum. However, there are some key issues that we expect that each credit memorandum that will be prepared by any bank should contain. The credit memorandum needs to be highly informative. It's very important, guys, it has to be highly informative, all right? Why? Because now you are sending this document, or you are sending someone's applications to individuals who are supposed to make a decision while they have never actually met the applicant. Remember, you are the one who have sat face-to-face for first interview. You are the one who have visited the business of this applicant, etc. So you need to make sure that it will be as informative as it can for those guys over there to make sound decision or to make correct decision. Now, the first issue that should be contained is the background. Now, as regarding to the background, you have to discuss or you have to explain the following. Number one, establishment and line of business. All right, that is to say, what is the name? What is the name of the business? All right, and what actually is the line of business? Saying line of business, we mean what do they do? Is it, for instance, a manufacturing company? Or maybe they offer simply some financial services or any kind of services. All right, what are they doing exactly? It's very important for you to be able to explain this. All right, so again, connection, that is to say, since when this particular business has been with your bank. For how long have you been interacting with this individual or with this business? Okay, so can be 1 year, 2 years, 10 years, or more than 10 years. All right, again, you have to explain this to the approving authority. Now, is there any important related parties of this business? Okay, is there any important related parties related to what? Related to the business or related even to your bank, like parties who have interest? Okay, for example, if it's the government or government institution, all right, there could be some interest. Or maybe the borrower is one of the major shareholder. All right, the borrower is one of the major shareholder of your bank. That means this borrower has some interest. Or maybe the borrower is one of the major corporate customer of your bank. You have to state this. I'm not saying that the relationship should influence your decision. You need to be objective here, because at the end of the day, a banker is supposed to protect bank position. Very important. A banker at all time, a banker shall protect what? Shall protect the bank position. Therefore, always be objective. Do not accept to be influenced. If your decisions are influenced by anything, you may jeopardize the position of the bank. It's very important to remember this factor. All right. Now, assessment of the management. On the assessment of the management, what are the issues you should highlight? Academic qualifications, all right. Experience in the line of business. Let's assume here, okay, the establishment is, let's say, Azam Corporation. Okay, Azam Corporation. Now, line of business, let's assume it's food and beverages. All right, food and beverages. Now, for how long have you been associated with Azam Corporation? Let's say over 15 years. All right. Any important related parties? Not applicable. Now, academic qualification. Now, here we're looking at the academic qualification not of the owners but of the management. All right. For instance, the manager or business, the CEO of Azam, all right, is Mr. Choroka. All right. Now, if Mr. Choroka is the one overseeing operation of this particular company, what are his qualifications? Right? What are his qualifications? Maybe he had a master's degree, okay, in business administration plus CPA. All right. And what about some other members? For instance, what about the finance department? What about sales? What about the procurement department, etc.? So you need also to explain the qualifications of all individuals who are involved in this particular company. All right. Experience in the line of business. All right. Now, experience in the line of business here, first you'll discuss or you'll explain the experience of the entire company as a whole. Okay. The experience of the entire company as a whole, and then the experience of the management. All right. For example, this company has been in food and beverages for 20 years. However, the management, for instance, Mr. Chororoka and his management team has been with this company for only 2 years. Okay. So the decision that we are going to make, based on the credit facility they've asked, the decision that we're going to make based on this information will never be the same as the decision that we would have made if we are to be informed that the company has been doing such a business for 20 years or more, and the management, the management has been with this company for 15 years or for 10 years. Okay. So again, you have to explain this. Length of service with the business. All right. I've already covered this in years. Then you have to discuss the market. All right. You have to discuss the market. Okay. Let's focus to our example, Azam. All right. I'm sure we all know Azam. That's the reason I'm using Azam. Now, market. All right. Azam is a multinational company. That is to say, it has a domestic market as well as international customers. So the company is all over. All right. Now, who are its customers? Can be Tanzanians, can be South Africans, etc. And again, here, if you have sufficient information, you can even discuss, like maybe it's Azam deals with only big customers. Okay. By saying big customers, I mean rich people. Or no, Azam deals with everyone. All right, you know better because you are the one who will sit for face-to-face interview with this particular customer and collect all this information. Now, we have mentioned that this business, Azam, is into food stuff and beverages. So here the question: are there some competitors? Okay, yes or no? Now, if we are talking of Azam, speaking of food and beverages, yes, there are some more competitors, and competitors are also domestically and internationally based. For example, when it comes to food stuff and beverages, there is More Enterprises, there is Azania, all right, etc. These are his competitors, all right. And what about at the international level? You guys must agree with me that we have also some food stuff and beverages coming from all over, from Middle East, from Europe, and also from some African countries. So all these are his competitors. You have to discuss now the kind of competition that Azam experiences or is facing from these companies. And if there is this stiff competition, then what is the strategy? Okay, what is the strategy that Azam is proposing in order to beat competition? All right, what is the strategy so proposed to beat competition? And the strategy I'm talking about should never involve what we call cheating. Okay, it has to be legal competition. we need to fight between or by while abiding to the rules and regulations, laws of the country. Technical aspects. Under technical aspects, we discuss issues such as sources of supply. Okay, for example, raw materials. All right, are raw materials imported? Who is your biggest suppliers? Who are your suppliers? Or are the raw materials simply cultivated? Okay, domestical. You obtain them domestically in the domestic market. Again, who are your suppliers? Right? Infrastructure. Right? Now, in the question of infrastructure, you'll discuss a lot of issues such as the premises. All right? Talk about transport issues and any other related issues. You need to also discuss all these. Continue. You need to discuss current facilities and security held. All right. Now, the question is, if the applicant have any outstanding loan with your bank, yes or no? You guys must remember the other day we went through the loan application form. Okay, you must remember this. And in the loan application form, there is one section where you're supposed to declare. You're supposed to declare on whether you have any outstanding loan. So this is what we are asking here. All right. So if the applicant having an outstanding loan, if the answer is yes, then you need to state. Okay. Now what are you going to state? You have to state type of the loan. For instance, an overdraft facility. The outstanding amount. Let's say we was issued a certain amount and it is still there. Let's say 100 million. Okay. Now, again, what is secured held for the value? Security can be debenture or can be a certain house, premises, plot, etc. It depends. Right? So you need to state. Not all the time the applicant might be enjoying a credit facility with you. The answer could as well be no. Therefore, if the answer is no, it means the rest of the question won't be relevant and we move to something else. Again, you have to discuss facilities that is being currently requested and the security that is offered to serve as collateral for that loan. Okay. So let's assume this company is now asking for an overdraft. Okay. Initially, current facility is an overdraft. Okay, an overdraft of 100 million. Now this company wants this overdraft to be enhanced. Let's say to 500 million. Okay. So, is it a renewal or a new application? If the applicant wants for the OD to be enhanced, that will be a renewal. Okay. But if it is the first time they tender the application, then that will be a new application. Now, what are the reasons for the request? The reasons for the request can be, or you can get this from the application form under the purpose of the loan. So it can be purchasing of raw materials, right? Or can be launching of new product. Maybe Azam wants to launch some new juices in the market. Another important issue that you need to discuss or you need to also write about is the proposed security. Okay, remember security has some qualification. Okay, now what is the proposed security for this loan? For example, the security is debenture. Now, is security new or it is the same security? It will depend. If I'm talking of a debenture can be enhanced. So we can increase the value of the debenture. And debenture can be floating debenture or can be fixed debenture. And that's the reason it is very possible to enhance the value of the debenture. Then it comes to another critical part of the analysis, financial performance. Now, under the financial performance, you're supposed to comment on profitability, liquidity of the business, asset utilization, funding of the business, and then you give your overall perception of the entire business. Okay, and depending with how big is the credit application, you may be required to use even some complicated models to ascertain, for instance, if the business will continue to exist for some years. We have some models of some formulas which I will say currently they are beyond your scope, but you can use them to tell if this business will continue to exist for 2 years or more. We have those. I won't discuss them with you, but I'll just give you what is at your level. That is, the customer will submit the application together with financial statement. All right. The customer will submit the application together with the financial statement. Now, the financial statement that are to be submitted will be, but not limited to, the following: the balance sheet. We call this statement of financial position. All right. Then income statement, the cash flow. All right. These are important financial statements that he must submit. All right. But from the bank, since this customer has been banking with us for some years, we can as well obtain the bank statement. All right, we can obtain the bank statement. Finally, projected cash flow. Now, why do we need these documents? We need these documents in order to study the financial soundness or the financial health, all right, of this business. From these provided financial statement, we need now to compute some ratios. Okay, we need to compute some ratios. Now, we have the following groups of ratios. Number one, liquidity ratio. All right. By computing liquidity ratio, then and only then you'll be able to comment on the liquidity of the business. So you need to know some formulas that you can use to compute liquidity ratio from the given financial statement and appropriate comment on the liquidity state of this business. Number two, you need to know how to compute profitability ratio, right? From the profitability ratio, then and only then you can comment or you can have a say on the profitability of the company. And before I move further, the financial statement should never be for only a single year, because you won't have a base for comparison. Therefore, we suggest financial statements to cover a minimum of 2 years, but depending with the credit facility in question, can go to as far as 5 years. So a period of 3, 4, 5 years, you'll be able to establish the trend, okay, of performance of this particular company. Then you need to know how to compute activity ratio. From the activity ratios, you'll be able to tell on the number of days this business takes to make sales, the number of days this business takes to collect debtors, all right, and also the number of days this business takes to pay out its debt. Okay, so to sell, to pay debts, and to collect debts. All right. Then the last ratio that we need to know is gearing ratio. Gearing ratio, also called leverage ratio. All right. Leverage ratio will assist you to comment funding of the business. All right. Funding of the business. Like, is this business over dependence on loans or credits? Because if the business has too much loans, if you add another loan, that will be more load added. So the business can overstretch. The business cannot afford to have another huge load imposed over it. How will you know this? You need to use the gearing ratios. Gearing ratio can tell you funding of the business on whether it is dependent on loans or equity or mixed. All right. Then the projected financial position. All right. Why do we need this projected cash flow? The projected cash flow, again, is supposed to cover some previous years and maybe a year in the future. All right. The previous years will assist you to understand so far how the business has been performing following whatever has been generated. Okay. Performance of the business following whatever has been generated in the past. Okay. And the future here, okay, or future projection will assist you to comprehend what the business actually intends to do or to generate if the project is to be financed. And when it comes to the issue of monitoring and evaluation, particularly now when we evaluate performance of the loan, we're going to use the projected financial position or the projected cash flow to compare the projected figure, which are these ones, against the actual figure in order to determine on whether this business is really doing fine or it is declining. For instance, maybe net profit, okay, net profit in the previous years, okay, in one of the years was determined to be, let's say, 2,000 USD. And the projection is that if you finance this business, net profit will increase by a certain percentage, let's say by 50%. Therefore, the net profit is going to be 3,000 USD. But this is projection. Now, actual figure, what is the net profit? Is it the anticipated 3,000 USD, more than that, or lesser than that? What are the reasons for such deviation? Monitoring and evaluation is of paramount importance. You bankers forget, due to either negligence or due to having a lot of commitments and targets to achieve. The moment you disperse a loan, you forget all about monitoring. And that's the reason you're faced with what? Higher rate of default, which can translate itself into NPLs or bad debts. But if you monitor the borrower, you can prevent this. And monitoring does not only involve you going to see what is actually happening on the ground of that particular business. You have to impose covenants. You have to impose covenants that this business will have to adhere during the entire tenure of the loan. We're going to discuss covenants. We have positive covenants and we have negative covenants. Simply say terms and conditions of the loan. Last but not the least, it comes to recommendations. What do you say about this application? Should we accept the application? If the answer is yes, then how much should we grant? Okay, how much should be granted, and for how long? Because remember, the applicant might say, please give me, let's say, Tanzanian shillings 1 billion for a period of 10 years. Now, what is your thought about this? Because you are the one who have analyzed this business. Should we grant the request, or we should grant for a lesser amount? Okay, should it be lesser amount or exactly what has been applied? And what about the tenure? You need to state, give out your reasons. Again, now if we are to grant the request, under what conditions? Okay, under what conditions you need to propose? So here is there again, we come to the need of what? The need of covenants. Terms. What should be the terms? Last, if we are not to grant the request, what are the reasons? What are the reasons for us not to grant this particular credit application? So again, here you'll state all your reasons. Okay, and afterwards, this gentleman will go ahead making the decision.